Good morning, everyone. My name is Alessandro Barison, portfolio manager of the QuantWave Fund. Welcome to our monthly update. The fund was up 1.45% in November. The performance was positive. The main driver were our strategies on equity indexes, which were positioned short at the beginning of the month and then turned into a long around the middle of the month. The short generated a positive return. The long, unfortunately, was a bit early, so our risk variables took us out right before the rally started, and that was a bit unlucky, but sometimes it happens. The equity strategies generated around 1.6% for the month. We had a loss on the strategies on FX, mainly driven by shorts on commodity currencies. Unfortunately, the bias short was not totally wrong, but the timing was unlucky. We were max short right before the Powell speech at the end of the month, which was clearly dovish and generated a loss on those positions. And we were stopped out basically on those positions, and we are now broadly flat. Our strategies on bonds were positive, generating around 0.5% for the month. The main driver of our long positions on bonds were the risk variables, general risk variables, and deteriorating growth trends. And this has generated a positive return of around 0.5. The credit strategies were also positive over the month, generating around 0.35%. The credit strategies were positioned long risk US credit versus short risk European credit, driven by diverging fundamentals and diverging fund flows. And we still have this position, but now with a short bias as we reduce the long in US credit. As we were discussing last month, our strategies are keeping a very short-term trading focus. Given the volatility, we think this is the right approach to have a short-term focus. The variables, the main driver of our positioning are still currently technical and flows variables, but growth and fundamental variables are increasingly having a weight on our signals and bringing the overall positioning of the book short on risky assets on average. We like this positioning. We are observing that flows and technical variables are having deteriorating trends, and we see flows are biased to sell rallies, and the leveraging position, the trend is also to the leverage positioning on future, apart from a few assets. So we like the short bias that the models are having in this current environment, and we think we can do well in the months ahead. And thank you very much for your attention, and have a good day.